Why does China's halt on U.S. soybean imports deliver a devastating blow to the U.S.? Published on the Chinese Internet, October 12, 2025. Hello everyone. Our channel selects viewpoints and analytical articles from think tanks and well-known figures within the Chinese Internet and presents them to Western readers so that everyone can understand how China thinks. If you find this helpful, please subscribe, like, and share our channel. Thank you. A few days ago, we explained the ins and outs of the China-US soybean decoupling, but judging from Donald Trump's formal announcement on October 1st, declaring that he would personally meet with Chinese leaders to discuss the soybean issue, it seems he's taking this matter quite seriously. Many people are puzzled, even if all U.S. soybeans were sold to China. The total value would only amount to tens of billions of dollars. Is that really enough for Trump to get so anxious about? Isn't he just handing China a card it can use to manipulate the U.S.? Actually, it's not that simple. China's halt of U.S. soybean imports strikes not only at American farmers but at the core of America's national foundation. Part 1. Petro-agriculture. People often wonder. China has more than 300 million farmers, producing around 700 million tons of grain each year. The U.S. has only 5 to 7 million farmers, yet produces 500 million tons of grain. How is that possible? The answer is simple. The nature of agriculture in the U.S. and China is fundamentally different. American crops aren't really grown from the soil anymore, they're synthesized by chemicals. Using oil and natural gas as raw materials and a series of chemical reactions to create fertilizers, pesticides, and fuels. In a sense, American agriculture is a giant petrochemical factory built on oil, what experts call petro-agriculture, also known as energy-intensive agriculture, chemical agriculture, or industrial agriculture. It is a highly industrialized system dependent on fossil fuels such as oil and coal. So how petro-agriculture works? In essence, it changes the way energy is converted. Traditionally, plants turn sunlight into chemical energy through photosynthesis, but this process is inefficient. So can we boost yield by injecting extra energy into the system? Yes, we can. Low yield? No problem, add some technology and muscle fertilizer. Fertilizers contain nutrients essential for plant growth: nitrogen, phosphorus, potassium, etc. Nitrogen promotes leaf growth and chlorophyll synthesis. Phosphorus regulates development, potassium enhances resistance and sugar accumulation. With fertilizers, crops shoot up rapidly. Pests eating your crops? No problem, spray pesticides. For instance, organophosphates like chlorpyrifos and dichlorvos, or insecticides like chlorantraniliprole, disrupt insects' nervous systems, causing paralysis and death, but too many weeds. Use herbicides. They suppress photosynthesis, deplete stored nutrients, and kill unwanted plants. Plowing and harvesting too slow. Use tractors and combine harvesters. This model extends even to livestock. How to make chickens, cows, and pigs grow faster? Feed them drugs: praziquantel, fluoroquinolones, and ractopamine, a growth promoter. The result? Higher yields. SOUC, American farming is nothing like the traditional image of toiling with your back to the sun. It's factory-style production input machinery. Fertilizers, pesticides, seeds, and technology. Output: corn, wheat, and soybeans. Land in this model is merely a container. The real productivity comes from chemicals, machinery, and fossil fuels. Answer: the source of it all, fossil fuels. Where do fertilizers, pesticides, herbicides come from? From fossil energy. All these agrochemicals are derived from oil, coal, and natural gas processed in chemical plants. Agricultural machinery runs on gasoline and diesel, both refined from petroleum. Without fossil fuels, this whole system collapses. If not for the yield gains brought by petro-agriculture, America, with only 2% of its population in farming, could never have become the world's top agricultural power and largest grain exporter. But is it sustainable? This model boosts yield, but at what cost? The biggest problem is energy waste. To produce 1 calorie of food, the U.S. consumes 10 calories of fossil energy. Traditional agriculture's energy ratio is roughly 1:1 between 1920 and 1990. The number of U.S. tractors increased 18-fold, trucks 24-fold. and combine harvesters an astounding 165-fold. Today, the U.S. has about 2.2 million tractors and 500,000 combines consuming over 20 million tons of diesel annually. A single large machine can burn 40 liters per hour. At the same time, chemical usage skyrocketed. By 1970, agricultural chemical consumption was 11.5 times that of 1930. By 1990, fertilizer use was 6.1 times that of 1946. The U.S. consumes 20 million tons of nitrogen fertilizer annually, mainly synthesized using natural gas 70% of cost, with total fertilizer use around 35 million tons. Pesticide production depends entirely on petroleum derivatives. 5 billion liters of herbicides are used every year, and what's the payoff? Food output increased barely twofold, completely disproportionate to the input. China, using 50-70 million tons of crude oil annually, produces 700 million tons of grain, at about 71100 gg of oil per ton of grain. The U.S., consuming 60-70 million tons of oil, produces only 500 million tons of grain, 120,140 gg of oil per ton. Far less efficient, a huge energy drain. Even worse, a large portion of U.S. grain isn't eaten, it's turned into ethanol fuel. Yet ethanol's energy density is only 66% that of gasoline, meaning the U.S. spends massive energy to produce an inferior fuel. But because environmentalism is politically correct in the U.S., such unprofitable ventures are sustained by government subsidies. The environmental cost. Herbicides and pesticides don't just kill pests, they also harm pollinators and beneficial insects, disrupting ecosystems. Chemical runoff contaminates waterways, damaging aquatic life. Continuous monocropping and heavy fertilizer use reduce soil organic matter, destroy microbial diversity, and degrade soil structure, lowering yields. To sustain output, Americans pump in even more chemicals and energy, creating a vicious cycle. In short, petro-agriculture is like a drug America can't quit. Once addicted, there's no turning back. Part 2, the butterfly effect. Generally, the impact of America's petro-agriculture would just be high energy consumption and pollution. But in this era of great geopolitical transformation, what China calls a century of unprecedented change, this structural addiction to oil-based farming could, when caught in a major power struggle, shake the very foundations of the United States. Why? It starts with the peculiar nature of petro-agriculture itself. 1. The monoculture. One of the biggest consequences of petro-agriculture is the loss of agricultural diversity. Anyone who has lived abroad knows how monotonous and bland American food can be. Search for videos of U.S. housewives cooking. You'll see meals made from factory-processed ingredients tossed together and boiled assembly line feeding as long as it fills the stomach. That's enough. No concern for flavor, color, or aroma. That kind of food might be tolerable for those who like mushy meals, say Indians, but if you fed that to the Chinese every day, there'd be a revolt. In terms of cuisine, no nation on earth matches China's diversity. Sweet, sour, bitter, spicy, salty, the Chinese palate spans all 5 flavors, with condiments and spices that foreigners have never even heard of. This cultural richness naturally nurtures agricultural diversity across China's vast land. Grains, wheat, rice, corn, beans, tubers, barley, broad beans, etc., oil crops, rapeseed, soybeans, peanuts, sesame, hemp, sunflower, and more, vegetables, radishes, cabbage, celery, leeks, garlic, onions, carrots, gourds, lotus root, coriander, lettuce, chili, cucumber, tomato, etc., fruits, pears, plums, apples, peaches, apricots, walnuts, cherries, strawberries, jujubes, and so on, wild fruits, wild pears, apricots, peaches, hawthorn, sea buckthorn, fodder crops, alfalfa, clover, green manure, medicinal plants, ginseng, angelica, honeysuckle, mint, mugwort, goji berries. Such diversity is a blessing to the Chinese stomach. America, however, is another story. Look at U.S. farmlands, they are monotonous to the extreme. Basically 4 crops dominate: soybeans, corn, wheat, and cotton. Add livestock, mainly cattle and chickens. Why so few varieties? Because after decades of fierce competition, U.S. agriculture naturally selected for the 6 most efficient, scalable, and profitable products: soybeans rich in protein and oil, used for both cooking oil and animal feed; corn not for eating, but for feed and corn syrup production; wheat the source of bread, easy to plant and harvest; cotton used in textiles and even military supplies. Once picked by slaves, now by machines; livestock, cattle and poultry, fed with corn and soybeans to produce beef, chicken, and eggs. And what food do these inputs combine perfectly to produce? The hamburger. 2 slices of bread, a slab of beef or chicken. That's American cuisine in a nutshell. If Americans had Chinese-style culinary expectations, this entire agricultural model would collapse. Just digging sweet potatoes and picking goji berries would drive most Americans crazy. So, scale and refinement cannot coexist. America's large-scale petro-agriculture can only produce bulk commodities efficient enough to feed the population's basic caloric needs. But no more. However, this very model creates a structural fragility. When your entire system rests on a handful of crops, even a slight market shock can cause economic tremors. Take soybeans, for example. In America's modern agricultural system, soybeans are indispensable. They're rotated with corn to restore soil fertility through nitrogen-fixing bacteria, reducing fertilizer use and improving long-term yield. That's why soybean acreage in the U.S. reaches 35 million hectares, roughly 1/3 of total farmland, and over 40% of U.S. farmers grow soybeans. The industry's impact extends across primary, secondary, and tertiary sectors: upstream, seeds, fertilizers, pesticides, and agricultural machinery; midstream, massive storage, rail, and highway logistics networks; downstream, oil pressing, feed processing, food manufacturing; and exports. The soybean belt, the American Midwest, also holds huge political power. When soybean prices fall, farmers' incomes and votes fall with them. In other words, soybeans are not just a crop, they're a lever of political control. If a foreign power cuts soybean imports, it hits not just 40% of farmers but millions across the supply chain. Now you understand why. When China suspended soybean imports, Washington went into panic and even Trump himself had to intervene. A single crop economy is dangerously exposed, and America can't really retaliate. What's it going to do? Ban peanut or potato imports from China? China wouldn't care. So this low diversification equals low resilience problem is essentially unsolvable. To the dual dependency of petro-agriculture, really, we said American agriculture depends heavily on oil and chemicals. But the reverse is also true. America's oil and chemical industries depend heavily on agriculture's consumption. Agriculture's prosperity keeps the petrochemical sector alive. Oil companies drill for crude and gas. Chemical plants use these to churn out fertilizers, pesticides, and diesel, completing an internal economic loop. The stronger the agriculture, the busier the chemical plants. The busier the chemical plants, the stronger the energy demand. This iron triangle, agriculture, energy, and chemicals, is a cornerstone of the U.S. real economy, and China happens to be the critical external variable in this loop as the world's largest soybean buyer. Whether we buy and how much we buy directly determines U.S. soybean revenues. If China, for strategic or market reasons, cuts soybean imports dramatically, the first domino falls. Winter comes for U.S. farmers. Soybeans can't sell, prices collapse, farm income plummets. With no profits, farmers slash spending, planting less next year, using less fertilizer and pesticide. Chemical orders dry up. Less planting means fewer fertilizer and pesticide orders. Chemical companies find inventories piling up, production lines idle, and some plants forced to close. Energy demand evaporates. Chemical plants are energy gluttons. Once they slow down, natural gas and oil demand falls off a cliff. Energy markets are fragile. When demand collapses, prices can't hold. See the chain? China squeezes soybeans, U.S. agriculture suffers, chemical demand collapses, energy demand weakens. One move, striking across sectors, reverberates all the way to America's oil and gas industry, and lower energy demand hits all producers but not equally. For Saudi oil companies, it just means smaller profits. For U.S. shale oil producers, it's potentially fatal. Why? Because shale oil is high cost and debt heavy, unlike conventional oil fields. Shale requires constant new drilling to sustain output, a cash-burning treadmill dependent on steady capital inflows. Most shale companies are buried in debt and need high oil prices to survive. If chemical demand weakens and oil prices drop even slightly, panic spreads. Below their break-even point, every new well means deeper losses. Capital markets notice, credit dries up, bond buyers vanish, banks demand repayment. No refinancing means defaults. Bankruptcy waves have already swept the U.S. shale sector several times in the past decade, proof of its fragility. So the shock from soybeans, transmitted through the supply chain, could become the last straw that breaks America's shale oil industry. That's the real butterfly effect. A single soybean order across the Pacific could decide the fate of a shale oil company in Texas. 3. The financial chain reaction, and it doesn't stop there. The U.S. is a deeply financialized economy. Every problem in the real economy gets amplified in financial markets. When farmers lose money and can't repay loans, what happens? Regional banks in agricultural states whose main assets are those farm loans start taking losses. Widespread defaults could trigger local bank failures and bank runs, echoing a 2008-style subprime crisis in agriculture. Meanwhile, shale oil firms have issued tons of junk bonds. If they go bankrupt en masse, those bonds turn to worthless paper. Energy debt is a key segment of the U.S. bond market. Its collapse could detonate the entire high-yield market, sending fear cascading through all risk assets. Now combine the two. Agricultural loan defaults plus energy bond blowups, cross-contagion through the banking system. A perfect financial storm. Banks tightening credit due to farm losses could starve even healthy businesses of funding. At the same time, energy bond losses erode their balance sheets, forcing layoffs and worsening unemployment, further suppressing consumption. In the end, what began as a trade adjustment could, through dual transmission real economy, financial system, morph into a systemic threat to U.S. financial stability. That's the essence of great power competition. Like chess masters, the killing move isn't made where it lands, it's aimed elsewhere, and the piece that ultimately dies might not even be the one that was struck. Part 3. Confidence in China's own path. When we re-examine this soybean-centered contest, it becomes clear that this is no longer a simple trade friction. It is, in fact, a calculated and far-reaching move by China, a cutting off the fuel supply strategy aimed at the very lifeline of American power. The United States, by relying on oil and petrochemicals, has turned agriculture into something Wall Street loves, a financial product, large-scale, standardized, and highly leveraged. This model looks glamorous on the surface but has a fatal weakness. It depends too heavily on a stable yet insatiable global market to absorb its massive homogeneous output. For decades, China has been the biggest buyer in that market. Now we have stopped buying or are buying much less. That small push has set off a perfect storm sweeping across America's heartland. The tears of soybean farmers are only the surface. The real tsunami is spreading along an invisible chain, the oil, petrochemical, agriculture, finance chain. Chemical orders have plunged, shale oil producers are drowning in debt, and banks in farm states are seeing loan defaults soar. This supposedly flawless petro-agriculture model, once held up as the pride of American industrial civilization, has, with the loss of its biggest customer, revealed its fangs of debt and its gaping financial cracks. It's like a giant who has long relied on powerful drugs to stay strong. Now that the supply has suddenly been cut off, all the toxins and hidden ailments are erupting at once. From another perspective, China's move, though aimed at soybeans, actually shakes three pillars of American hegemony, undermining the foundation of the petrodollar. The shale oil industry is the cornerstone of America's dream of energy independence and a key link binding the dollar to global oil. A fall in soybean demand depresses oil prices, cutting off the already strained cash flow of shale producers. It's like blowing a hole below the waterline of the great ship called the petrodollar system, piercing the bubble of the financial myth. The hollowing out of the U.S. economy is no secret. Agricultural loans and high-yield junk bonds in the energy sector are landmines waiting to explode. Soybeans could serve as the fuse igniting these financial explosives and revealing that the prosperity of New York and Chicago rests on the fragile sands of Iowa and Texas. Challenging the narrative of institutional superiority, how can a system that can't even stabilize the livelihoods of its own farmers or manage the risks of interlinked industries claim the right to lecture others about governance? The soybean crisis exposes the short-sightedness and impotence of a political system hijacked by interest groups and the deep dysfunction in its internal coordination and governance. Thus, China's soybean counteroffensive is a textbook example of striking one point to shake the whole system. With the power of our own market, we are testing the true resilience of America's national foundation, and what we've found is that this supposedly indestructible fortress is riddled with cracks. The soybean war has, in turn, strengthened our confidence in our own path. It reminds us that the modernization of a great nation cannot depend on any single external model, nor can it come at the cost of strategic security or ecological sustainability. What we seek is a diverse, resilient, and self-reliant modern agricultural system. A single soybean reflects two nations' contrasting strategic choices and their divergent futures. Whether America's national foundation is truly shaken depends on its courage for self-reform. Whether China's national destiny continues to rise depends on our steadfast determination to hold our food security firmly in our own hands. In the end, time will tell who the true winner is.